start our next session. It's a fireside chat with Dick Costolo. Let me give you a little background before you jump in. The title is going to be Serial Entrepreneur with 3 Exits and former Twitter CEO who took the company through IPO, shares lessons on building and backing transformative companies. Dick is a managing partner and co-founder of venture capital firm 01 Advisors. I hope I'm saying that right. He's shaking his head, so that must be good. Prior to that, he was CEO of Twitter from 2010 to 2015, having joined the company as COO in 2009. He oversaw major growth and was recognized as one of the 10 most influential U.S. tech CEOs by Time Magazine. Before that, built several startups, of which one he sold to Google. We're going to break this kind of 40-minute chat into 3 parts: past, present, and future. Dick, welcome very much. I'm thrilled that you're here. You got to go off mute, Mr. Technologist. There you go.
Sorry, I always come in unmuted, and then yours I came in muted. So anyway.
No worries. Great to see you. How you doing?
I'm good. How are you? Unmute is the great mute is the Zoom mute is the great equalizer. It removes all status from the room.
It's true. I mean, it happens to everybody, especially it probably happens a lot to you, but yeah. I get on the calls with these brilliant rocket scientists, deep tech. I mean, so brilliant, similar to you. And all of a sudden the mute is, we messed that up. And during my keynote earlier today, I messed up just the play button in Zoom. So, we can't be perfect. No. So let's kick it off. Many know you as, you CEO of Twitter, now venture capitalist, but few know that you actually started out doing improv comedy in Chicago.
Yep,
and so right. Obviously, how did you go from a comedian to a serial entrepreneur? And there must be some joke in there somewhere.
The joke is on me. So I studied computer science at the University of Michigan, and when I was a senior, I decided that I didn't want to take any of the offers I had from, actually the only company that I had an offer from that's still really around is IBM. The rest were like Burroughs and Honeywell and those folks, DEC. And I decided I wanted to try to get on Saturday Night Live. So I went to Chicago and auditioned for Second City because that's where all the SNL people came from. I actually got there the same day as Steve Carell. So Steve and I performed together at Second City for like 6 years together. And I was
amazing.
I was there with Amy Poehler and Rachel Dratch and Tina Fey and all those guys. And I auditioned for SNL twice and didn't get it either time. But to my credit, Steve auditioned for SNL 3 times and never got hired, but he stuck with it and it worked out for him. So all's well that well. And then it just ended up going back and, I was like, all right, I got to put my degree to use. And it was right around the time the, Mozilla browser was taking off. And I was like, oh, this is the future. And I just started my first company.
So tell us about, I remember back then I was in the mid-90s. I worked at Home Network in Silicon Valley. It was just a couple of years that, at the same time Netscape was coming out and going public. So tell us a little bit about, it was a couple startups, a web dev firm, and then an RSS feed company called FeedBurner. Yep. Tell the audience, like back in 2000, what was that? Yeah. And go ahead.
No, the idea behind FeedBurner, so this is pre-Twitter. Actually, Twitter and similar services end up displacing what FeedBurner did. So there's this technology in the early 2000s called RSS that allowed you to syndicate web content anywhere. So in other words, instead of going to, your favorite VC's blog in the morning and your favorite news site and the New York Times and, ESPN or whatever, there were these feeds that were XML feeds that you could distribute anywhere. And there were these tools called web readers or aggregators that would aggregate all the different feeds. And so you could read all your news in one place. The idea behind FeedBurner was we're just going to be a publisher clearinghouse to match publishers and subscribers and do things that help publishers understand, here's everywhere my content is going now that it's distributed off my site. And, I have AdSense ads in my site. I'm now going to put them in my feed. And we just felt like we're going to be the publishers syndication clearinghouse, sort of the MasterCard or Visa connecting publishers and subscribers, if you will. And then Google bought that company because they were like, okay, if the future is syndicated and out on websites, AdSense is, in big trouble if we're not a part of that. Of course, literally the year after I sold my company to Google, Twitter came along and kind of became that next way of syndicating the way your thoughts and what you were thinking about through that you know centralized service.
So, what was during that feed burner days? What was your biggest, sometimes I just like it helping the
Yeah,
audience with. A lot of times we learn the most from some of our mistakes. So, what do we learn
yeah,
from? So, what was the biggest mistake the feed burner days that happened
yeah.
and that you learned from?
Yeah. The biggest mistake, what I would say the thing we did right and the thing we got wrong was we just we weren't in Silicon Valley, we were in Chicago. And there was Open Table there and maybe one or two other companies that were founded there, but we just weren't thinking big enough. We didn't have a big enough vision for scaling quickly, going as fast as we could, scaling ahead of demand. And so it was just it was a successful startup, but in many ways we had this sort of parochial mindset, if you will, and just weren't thinking big enough. I remember when we sold to Google, and I was at my first Google All Hands with Larry and Sergey speaking in 2007 after we sold the company. I was like, oh, it was really eye-opening to like, oh, they're thinking big, big. Like, we're not just going to
Wow.
be web search. This will be where you go for all your products. This will be where you read books. This will be like, oh, right. That's the right way to think about things. So I think that was our biggest mistake. And one of the things I encourage founders is to, make sure you're thinking big enough. That's probably the biggest mistake we made. The most successful thing we did was understand that Google is a much bigger behemoth than us. And instead of, I think people frequently think that they're going to be able to achieve something. We don't need to sell to Google, or I mean, look at, I don't know if you remember the live audio social network Clubhouse. Jack Dorsey offered to buy them for $4 billion when they had
I
eight
do remember
employees,
that.
and they turned him down, and now the company doesn't exist.
Yeah,
So,
yeah, no longer
and
exists. So
yeah,
it's a timing issue as well,
yeah,
obviously.
we were smart enough to realize like don't get too far ahead of yourselves and so forth. And this is probably the
Okay.
right outcome.
And then you joined Twitter as COO in
Yeah,
2009. And how
yeah,
did that come about from,
yeah,
transitioning from Google
yeah,
to that? Um,
yeah. I met the future Twitter guys when they were at Google and had sold Blogger to Google. So Ev
right.
Williams and Jason Goldman and Bid Stone had sold Blogger to Google. And when we got to Google, Larry and Sergey said, "Hey, you should go meet one of the other CEOs of a company we bought to help them understand." What it's like to work here and what it's like to be a former CEO who's now. So I got to know those guys. And as I was coming in, they were going. They were as when Google finally did buy the company in 2007. Ev and during the purchase process, I'd got introduced to them. By the time we joined, Ev and Biz and Jason had left and started Odeo, which became Twitter. So when I left Google 2 years later, in summer of 2009, Ev right away said, "Hey, we really need someone to come in and be an operating executive here who's done this before, and you have." So I took the job.
Cool. And so, I mean, so you went from startup in Chicago, feed burner, to big company, Google,
Yeah, yeah.
and then to that stage back to Twitter, which I
I
mean,
mean,
roughly how many people? So what was first impressions there? And like, okay,
it
what
was
were
a
you
mess.
focusing?
It was a mess. But you know what the funny thing is?
In an
One
exciting
of
way, probably.
Yeah, but I'll actually backtrack for a
Okay,
minute to Google because
great.
one of the second lessons learned at Google was, oh, everything is not going as well as it appears from the outside. It just so happens that we have this thing called AdWords that prints money and shoots cash out of the ventilators, and it enables the leadership team to make all sorts of insane mistakes that don't end up mattering. So I'll give
Right.
you one example. Um, Google decides they want to try to buy this company, Grand Central, that eventually becomes Google Voice.
I
They do
remember
that
that.
company that becomes
It was
Google Voice.
CNET founder
That,
Halsey
that,
Minor, wasn't it?
that is exactly right. It was Halsey
Right.
Minor. So the corp dev team at Google texts me and says, "Hey, similar to me getting introduced to Ev, says, hey, we're going to go pitch Larry and Sergey on the buying this company, and it would be good to have a CEO from an acquired company in the back of the room in case Larry and Sergey have questions. And blah 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 blah. I'm like, sure. You don't have to do anything. Just sit in the back of the room while we're discussing this. And
Uh-huh.
at this point, I've only been at Google for like 2 months, and I'm still sort of wide-eyed. And this is this amazing company, and I'm working for Susan Wojcicki at the time, who is awesome. I'm like, great. I'm going to get to go into this corp dev meeting with the founders of Google, and it's going to be like really insightful, and I'm going to learn all this stuff. And I go in the back of the room, and the meeting starts off by the corp dev team saying, okay, hey, we want to talk to you today about this company we want to buy, Grand Central. The purchase price is $92 million. Haven't even talked about what the company does yet. And right away, Sergey says, $92 million, we could build a lunar landing module for $92 million. And Larry goes, there's no way you could build a lunar landing module for $92 million. And we proceed to observe an argument between Larry and Sergey for the next 30 minutes over whether you could build a lunar landing module for $92 million. And I turn to the head of engineering who wants to do the acquisition who's sitting next to me, and I whisper, like, is this plan B? Like, what's going on? Like, is anyone going to say we need to go back to the meeting ends because Larry and Sergey have to leave. And I'm like, okay, now what happens? And the head of corp dev goes, I'm going to call the CEO. I'm going to call Halsey Minor and say,
Says it's
Larry and Sergey got called out of town. We're going to meet with them again next week. So it just, one of the other things I learned at Google was, oh, like when people tell you how awesome, company X is and it's doing really well, and it doesn't mean that everything's always going according to plan. And so that was super helpful when I got to Twitter, because I got to Twitter and it's growing like a weed, but it's a totally a mess internally. Like the site, I don't know if you remember at the time in
the fail
2009.
whale kept the fail
Yeah,
whale kept on appearing.
we literally had a brand name associated with the site being down, the fail whale. Like it was, I don't know if that's ever happened since or before, but we had a brand name associated with the service crashed. And the company was just kind of everything was, decisions never
That,
got made. There
and
were,
that brand name came up. That brand name, sorry to interrupt, Dick, was always about because when the system was down, you landed on a web page where there was a big whale, and
there was a
it
big,
was the
yeah.
Twitter whale. So I mean, it was kind of
Yeah.
self-induced branding.
Biz had drawn a whale with balloons attached to it that became known as the fail whale,
Right.
which was just a page that said, we'll be right back or something like that. And so I got there and I was like, okay, at least instead of freaking out, like, oh, this place is a mess, it's not what everyone thinks, I at least had the Google experience in my back pocket of, all right, this is just the way things go out here. People have one expression on the surface, and then behind the scenes, things are a mess, but we have to clean it up.
But so it's kind of a story that I bring up frequently because it's one thing to have that kind of failed whale, but there was so much demand and so much interest, and that actually gave more interest and more demand and more press. And so it's kind of like there was early IBM commercials you probably remember that said you need all these server farms for your launch, but if nobody comes, there's no value. It's
Yeah.
like a double-edged sword, but if a ton of people want to use it, it's actually a good problem to have as long as you get out of the problem soon enough. Wouldn't you agree, or something like that?
100%. And it just goes, I mean, it always goes to show you, I read these. There was one of these on Twitter yesterday, actually. I guess we're supposed to call it X now, but I still call it Twitter. There was one of these on X yesterday of somebody going through, here are 20, founder CEOs of top companies, and the things they all have in common. And it was, Ben Silberman from Pinterest and Drew Houston from Dropbox and Jack Dorsey and on and on and on. And it's just the reality is it's just nonsense. Like there are lots and lots of different ways to be successful. Some of these founder CEOs are great CEOs. Some of them are great founders and bad CEOs. Some of them are bad founders who had the right product at the right time and brought in the right team. So one of the things I always tell YC founders or other CEOs who come and ask me for advice, they've read the Steve Jobs book and they'll say something like, oh, Steve says you have to say no to most ideas and should only say yes to a couple things. My first response to those people is always, you know what? There are lots of different ways to be successful. And, it has almost nothing to do with following somebody else's playbook.
Yeah, no, that I think that's great advice, and everybody's going through their own roller coaster, and there's different advice for
Yeah,
different times of different domains, and
yeah,
there's never one size fits all. And I think
that's right.
being empathetic and listening and
Yeah.
trying to help people through things without there's never one answer, and people always ask for one answer.
100%. I'll give you another version. I'll give you a Twitter story that maps exactly to that, actually, now
Great.
that I brought up Steve Jobs. So we decide at one point after I become CEO, and we can happily talk about that. Jack Dorsey is now the chairman of the board, and I'm the CEO. And it's beginning of 2011, and I've just become CEO in October of 2010. And we have an open board seat, and we decide to try to get Jeff Bezos to take the board seat. We're like, who's the best person we could get to join the board? Bezos. And so Jeff says to Jack and I, listen, I don't let any of my C-suite take board seats because we should be focused on Amazon. So I really shouldn't do this any either. But it's interesting enough that I want to at least have the meeting and like let's talk about it. So Jack and I sit down with Bezos and have this discussion. And Jeff asks, like, tell me about how you think about strategy. And right away, Jack said, Jack is real Steve Jobs acolyte at this point. And right away, Jack says, well, Steve says the most important thing about strategy is to say no. And the CEO's job is to be the chief editor and blah, 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 blah. And Bezos looks at him and goes, oh, yeah? Well, I like to do everything. And he has this big laugh. He goes, my team has to talk me out of stuff, And he was like, hey, Jack, just so you know, there's lots of different ways to be successful. And if you
Uh,
think reading the book on so-and-so is what Steve Jobs is like, it's not exactly what he's like. So it was just a great reminder that you can do it you can be
it,
successful doing things the
there's
exact
so many,
opposite of
so
Steve
many,
Jobs.
exactly, so
Yeah.
many different ways to do it. So talking about that, period of CEO, what do you think was the toughest moment that you dealt with? I mean, there were probably many, but I mean, in your mind,
I mean, they're
what was the toughest? What
like
was that? There's
pick
probably a
a
bunch of them.
pick a Tuesday.
Yeah.
I mean,
So
I'll give you a couple examples, and
great.
I'll give you a couple. Well, first of all, the biggest regret was we tried to buy Instagram a month before Zuck bought it at Facebook. So it's February 2012. We tried to buy Instagram, and we offer Mike and Kevin, the founders, Kevin Systrom and Mike Krieger, the founders of Instagram. There's only 6 employees in the company at this point, and yet we all realize this thing's like gonna be a monster. And we offer them 10% of Twitter at the time, which was like, we just raised money at $4 billion dollars, and 10% of the company at the time is plenty. And I'm telling Evan, like, you're going to be able to run product for the whole company. You're the best product thinker in the Silicon Valley right now. And they turn us down. They raise money from Greylock. And then a month later, they sell to Zuck for $1 billion, 300 of cash and 700 of stock. And I call Kevin and I'm like, hey man, I would have like, if it was the cash, I would have like borrowed 300 million,
Just to
350
do it.
million from JP Morgan and given it all to you. But Mark, good on him, locked them basically in his apartment for a weekend and, didn't let him go until you gave him everything he wanted. So that was the biggest regret for sure. I mean, think about the history of the internet would be totally different if we had gotten Instagram and they hadn't. Okay, the
So
biggest challenges though were almost always related to should we take, they took Trump's account down long after I left, but it was always around trust and safety issues of like, all right, is this okay or not okay? I'll give you a specific example. And I mentioned this one because people who are users of Twitter always say, well, it's easy, just delete, if someone does X, delete it. And if they do Y, don't delete it. Why is it so hard? I'll give you a specific example. So ISIS, at the time, the terrorist group ISIS captures these pilots from one of the countries attacking them, puts the pilots in these orange jumpsuits in cages and burns them alive. And they video it and take photos of it and they post those to Twitter. So my general counsel comes in and goes, hey, this is happening. I think we should just suspend any account immediately that posts these photos and videos. I'm like, sure, easy, like no brainer, easy decision. Later on that day, I get a call, I get a text from Kara Swisher, the reporter. She's like, "Why did you guys suspend the New York Post account?" I'm like, "What?" And I find out the New York Post has posted the photo of the pilot being burned alive, and the trust and safety team's like, okay, here's the rule, suspend. I'm like, ay, ay, ay. So whenever we would have these discussions around, this is a black and white issue. Obviously, we should do X. It was never as black and white as everyone thought it was. And then you would have these like, okay, well, now what do we do? Can you post that if we know you're a good guy? You know,
Right.
can you
Well,
post it if
it's
you're
like,
from this country but not that? You get it. And these things happen constantly.
I mean, it's like similar to the comment earlier we talked about. Like, there's not one answer in
Yeah,
giving advice. There's not one. Unfortunately, unfortunately or not fortunately, there's different views, and everybody, there's right and wrong in different people's vantage points. And building a platform and the network effects of that, it's very hard or impossible to say one group is wrong and the other. There's more
yeah,
right and more wrong.
yeah, that's
But
right.
and everybody's gonna have a different perspective on that.
Yeah, and my
Um,
and the great takeaway from that is you will see, otherwise very, very smart people like Elon, the current owner of the platform, saying it's just easy. You should just have rules for X versus Y. And I remember when he bought the company, I was like, you're about to find out, man.
you can't do
You're
that.
gonna see. Yeah, you can't do that. Or like, oh, this thing's a bot. Just delete all the bots. Okay. Well, the New York Times weather Twitter account is a bot. So you're gonna delete
Yeah,
that? You
yeah,
get it.
exactly.
You get it.
Exactly. So, tying what you said about you're interested in acquiring Instagram, just as a reminder, to the whole audience, our it relates to our next topic I want to ask you about. So, our thesis at LDV Capital since founding in 2012 is majority of data our brains analyze is visual. So, a majority of data that AI will analyze will be visual across the light and electromagnetic spectrum. Back then, it was thought as cute niche in science fiction. Now it's validated. And you were about to buy or tried to buy Instagram in 2012, roughly. Then Twitter acquired Vine, the video platform, and then Magic Pony in 2016 for 150 million, all in the imaging space. So tell us a little bit about when you were there. Was it always the goal to add more rich media? Did it all of a sudden start to say, what, why then? And why
Yeah.
not earlier or later?
Yeah. So before I became CEO, there was this, what I will call stupid thesis inside the company that all tweets are equal weight and photos and videos shouldn't be bigger than the text tweets. Otherwise, they'll get all the attention. And my response to that was when I was COO rather was, hey man, go look at Facebook. 95% of the usage of Facebook is photos and videos and people commenting on the baby photo or whatever, and not like current whatever status someone has written in. Like the idea that photos and videos should be weighted in the timeline equally to text is dumb. Like if I write a one line text tweet, it should be this big. And if I take a photo, it should be so I can see the whole thing, it should be this big. But before I was CEO, they were like, no, 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 we have to crop the photos because all tweets are created equal, which I just thought was idiotic. So the moment I became CEO is like humans, what you just said, humans are more interested in and want to engage with rich media, and it will always be so. And so we
Okay,
immediately started investing more heavily there.
great. Well, we could talk Twitter for a while longer, but I want to bring it, closer to the present and a little bit into the
Great.
future.
Let's do
Um,
it.
After you left Twitter, you also decided to kind of get in the fitness tech area and start a startup called Chorus. I mean, why
Yeah.
that?
Yeah.
And tell us a little bit about kind of that little chapter of your life.
Yeah, going from running a 5,000 person global company where you're meeting with the Prime Minister of Japan, in the Japanese, presidential palace, and meeting with Modi in India and getting called into the Obama. I remember the first time. So I'm transitioning to the startup, but I get called
Okay.
once as CEO of Twitter. I've just become CEO of Twitter, and my assistant comes in the room during a meeting, and goes, "Hey, there's a phone call for you." I'm like, "I'll call him back. Like we're having our Monday morning status meeting," and she goes, "It's the White House." And my immediate reaction, being like a Detroit, good Midwestern boy, was like, "I didn't do anything. What are they calling me for? I didn't do anything." And they're like, no, it's Valerie Jarrett. Like the President Obama wants to meet with you about, Edward Snowden and blah, blah, blah. So going from all of that to then, there's five of us in a room and like we're out of printer paper, who's going to go get printer paper was definitely like culture shock. But the thesis to the company was people get personal trainers for social accountability. They don't get personal trainers because they don't know what to do when they go to the gym for the most part. It's like,
Right.
I got to go at 9 a.m. because I got an appointment at 9 a.m. and I'm paying this woman or this guy all this money. So I got to go because I show up and then I stay for the whole hour and not just half hour because I'm paying them this money and they keep me there. Fine. So it's
Sure.
like, oh, well, now that we're in the digital era, we can have like social accountability where we're all on, instead of like going to a CrossFit gym, we're all on a team in a group in the Chorus app and we'll hold each other accountable. But the challenge to virtual social accountability ended up being when people missed something that they were supposed to do, their first reaction was embarrassment and shame. Their next reaction was to stop, no, delete notifications in the app. And their third reaction was to delete the app. So I was like, okay, we're bumping into human psychology. And, this is just, and so it just didn't work. And we returned the capital to investors and bailed.
Wow. So, I mean, obviously going from startups, Chicago, feed burner, big company, back to startup, Twitter, Silicon Valley, MS, big company, amazing successes and challenges. Back to the startup. I mean, it's like almost you're, sick and twisted. Kind of like you need this adrenaline, or what?
Yeah.
What is the
Yeah,
back
yeah,
and
yeah. I
forth?
just thought I just thought it would be super easy to go back to it and get back into it, but it's just hard. It's like you got to going back to scratch after you've done all that stuff at massive scale and solved all those problems 20 times is just rough. So it was easy for me to decide at that point, like, okay, it's time to move on to investing.
Okay, so tell us now. Now we're perfect segue. So you in 2018, I believe you and former
Yeah.
Twitter
Yeah.
COO Adam Bain launched Zero One Advisors.
Yeah.
I mean, you've met so many investors. You're an investor yourself for years, probably. And so, what was the sweet spot, or what was the
Yeah.
the the
Yeah.
framework and profile, and why? Tell the audience what
Sure.
is Zero One Advisors.
Sure. When I got to Twitter in 2009 as COO, there was a guy there named Bill Campbell. Bill Campbell was famously on the board of Apple and Steve Jobs' close friend, um, and in fact was the only person outside of family at Steve's deathbed. And he also was coaching Larry, Sergey, and Eric at Google. And he had written a book well, Google guys have written a book about him since called Trillion Dollar Coach. Well, the third company he was at was Twitter. The benchmark investors had brought him into Twitter to try to get the team's act together. And Bill was pretty instrumental in me becoming CEO in 2010. So in 2018, when Adam and I, my CRO at Twitter and Jack's COO, got together, we were talking about the fact that Bill had passed away a few years earlier, and we were lamenting the fact there was no one around like Campbell anymore. There's tons of people who had worked at Facebook and Twitter and Google and had gone on to become VCs, but they were doing like seed and A. And there were these big growth funds like Tiger Global and Cotu and D1 and those were all finance people, but there was no one really helping companies out at that point where they found product market fit. And now they need to go from building a product to building and scaling a business and who understood all the challenges they were going to face. And so that's what we decided to do. We're like, let's go do what Campbell did for us and be investors at that sort of early growth Series B stage where the bolts are coming off the rocket ship. It's still founder-led sales. I got to now figure out how to build a go-to-market team. I got to figure out how to deal with having multiple offices and the 90,000 other problems that you run into that you've never run into before.
Um, and so that makes sense. And so, thinking about like every firm kind of has different stages. Ours is, 30% pre-Inc., pre-revenue, pre-product, deep tech. And that's all we do. And when you look at yours, just starting to get the kind of the go-to-market and then and really put the fuel on the fire. What are a couple of metrics that are important
Yeah,
to you guys
yeah,
um, to understand so the audience knows how and when to come and reach out to
yeah.
you?
Yeah, we're like 5 to 10 million of, either, annual revenue or recurring revenue. So it's not super early. It's not too far along yet. There's a number of logos. It's not just, my former employer is using it and my seed investors, two portfolio companies are using it. It's expanded beyond that. And the team is this is so you can be smaller these days with AI, obviously, but it's you're 20 to 40 people. You're kind of things are like moving along. We are not the hey, we've got two customers and there's six of us and everyone still makes all the decisions together and we sit around we sit around the table and we work and do stuff. That's not us. We're not, there's nothing for us to do at that point. We're first company we got involved with was Carta when Henry Ward had like 80 employees and, revenue is growing like a weed and he's running around like a chicken with his head cut off. And I remember I sat in the back of one of his Monday management team meetings. And because we were like, okay, we'll be really good at this, but is there really a need for what we are doing, or can people just figure this out for themselves? And we're sitting in the back of the room, and I'm sitting in the back of the room rather, and Henry has his management team meeting, and I'm taking notes, and no one else is taking notes. So right away, I'm like, okay, everyone's going to forget what happened here. And I write down in my notes during the course of the 90-minute meeting that Henry has taken 9 to-dos, action items for himself out of the meeting. No one else has any action items. I was like, okay, now we know why he's running around like a chicken with his head cut off.
Yeah, you got to flip that.
Yeah. So at the end of the meeting, I sit down with Henry. I'm like, Henry, how many action items did you take out of that meeting? He's like, 2. But like, okay, there were 9. We already know you forgot about what 7 of them were. Let me tell you how next Monday's meeting is going to start with you having like, oh yeah, sorry, I forgot to do that. Oh yeah, so I texted Adam. I was like, oh man, there's just such a huge need for this. Because once you've done this stuff 20 times, you're like, okay, I know what needs to be done here, and it's
There,
not.
there is the,
It's
I
not
mean, there is
rocket
kind
science.
of there isn't a kind of, sorry, there's a kind
No,
of
go for
a
it.
playbook, but
Yeah.
it's, or a pattern recognition, but there's also the outliers to that. But there is, we see this a lot, even in the earliest stages. There's a consistency of similar questions, different stages, different point. So
100%.
yeah. And so for that, I think
I'll give you a simple example that
okay,
happens actually CEOs of growing companies do this all the time. It's a great classic, I think, mistake. So they had some customer somewhere that something happened with, and now the customer was, super mad at Carta, and Henry goes, that can never happen again. We have to make sure blah, blah, blah doesn't happen again. So I want to add a step to the, onboarding process where, we check to make sure. And after the meeting, I'm like, Henry, don't start solving problems with process all the time. You need to manage the outcomes, not processes. If you do this every time some customer problem happens, pretty soon we're going to be the TSA and we're going to be making sure everyone takes their shoes off and doesn't have any water and, and blah, blah, blah. But we're not making sure the point is make sure there's not a bomb on the plane, right? But
sure.
they don't manage the outcome. They manage to a process because it's a government bureaucracy and they're all CIA. You can't do that inside a company. But early CEOs, as they start to grow, they think the solution to the problem is add another step to the process so that never happens again. And you just can't do that, or you get bogged down and the company grinds to a halt.
Makes sense. Makes sense. So a couple of the other companies you mentioned that you guys have invested in, I think fintech, Tipalti, Spot On Payments, SMB SaaS. Where is Visual Tech and AI sitting there? And I'm sure there are some, examples of that or
Yep.
interests.
It's actually a space that we don't have any current investments, but are looking at 3 companies right now. And the reason is one of the things that's happened in the industry just recently is I'll use a specific example. There's this company called Harvey that's a legal AI company, and it's
Yep.
growing like a weed, and all sorts of
Yep.
law firms use it. Well, along comes Claude with a legal plugin that now solves with a $500 plugin what law firms are paying $2,500 a seat to Harvey every month for and starting to churn out of. So there's been a growing sense of you can't just invest in AI vertical software. You need to understand what the ML or AI hook is into the real world, because real world infrastructure and physical assets that are tied to, you just had the doctor on talking about medical imaging
Right.
and getting colonoscopies. That's going to be where value accrues that an LLM can't just go do itself. Because you have to have, this particular hospital has its own data, it's proprietary data, and they're not going to give it to Claude and blah, blah, blah. Anyway, so we're looking at tons of systems now that are the combination of ML and imaging or physical devices. One, I'll give you one specific example, is just it's a Flock-like company, but not Flock. That is, communities install them at stop signs and red lights in the community, specifically near grade school, middle school, and high schools to make sure everyone's actually coming to a full stop at the stop sign. And then they actually use the imaging and everything to do the ticketing themselves and have great results on. This is super easy, but they have great results on when you install these cameras in our system near high schools, middle schools, and grade schools, accidents decrease by X% because people going through rolling stops and not paying attention decrease by almost 100%. So that's one simple example. It's going to end
Those,
up being, I think, a huge company, but there are
those are
lots
great
of them.
examples.
Yeah.
Yeah, and I think we think similarly. I mean, we've invested in the years past in about 9 or 10 companies pre-generative AI. There were GANs and generative AI, and now where do you go beyond? There's more and more of the software imaging and physical world businesses. So we're looking in mining, we're looking in synthetic
Mining,
biology and agriculture,
yeah.
in construction, in
Construct
and all these
the construction
huge.
examples are so great because for anyone who lives in San Francisco, they were going to close down Van Ness, I think, for a year to put a bus lane in, and they ended up closing it down for almost 6 years. So like, oh, when we started digging, we found like, well, you should have imaging, you should have, imaging
Yeah,
infrastructure that looks over across the entire street before you dig hole number one and go, all right, now let's make a plan for everything we got to do now that we know exactly what's under there instead of, oops, we ran into this pipe and we don't know what it does.
right, exactly. Cool. We got a couple minutes left. We can keep talking forever, but let's start a couple questions to kind of bring it to close. And I like asking this to everybody. Who inspires you every single day, Dick?
Um, it's funny you asked that, and I've got a funny answer for it.
Good,
What
because it
during
brings back to
COVID,
the comedian improv. I
yeah,
mean, this we're going
kind
full circle. I like this.
kind of. During COVID, I decided I need to learn a new skill. Like I'm not going to just sit here and drink tequila all day,
Right.
which I started off COVID,
Is that cooking?
doing. Yeah, it's cooking. And so I decided I'm going to I want to learn Italian cooking, but I want to learn it from some grandmothers in Italy. And I found a woman named Sandra who's now 82 years old, and she's the cook still with her kids also helping her at this restaurant called Il Guscio in Florence, Italy. And I go see her twice a year, and she teaches me to make one of her specialties. And she's up at 7 a.m. every morning. She's in the kitchen yelling at people not to burn the
Wow.
onions in the sofrito. And she goes back home upstairs to her apartment every day after she's done making dinner. And she's just awesome. She's got this. When I first worked with her, she, of course, doesn't know. First day I'm there, has no idea who I am. Her son Giuseppe speaks English, so he's translating for me. And she goes to him like, "Who is this guy?" you know? And Giuseppe goes, he's speaking in Italian, of course, which I don't understand at the time. And he says he's like a big deal in tech, and we're making orecchiette and the pasta, the ear-shaped pasta. And she's flinging them off her knife like this. They're literally flying. One is on the knife while the other one's flying through the air. And she says something to him in Italian, and everyone in the kitchen bursts out laughing. And I say to Giuseppe, like, what did she say? And Giuseppe goes, Mom says you may be good at many things. One of them is not orecchiette.
I love that. I think actually you sent me a couple of videos, and I wish I
Yeah,
had
yeah,
them
yeah.
keyed up for this. But
Yeah.
okay, that's a great inspiration. Now, next question. Looking, 20 years ahead, which is crazy at the innovation pace. But what's the most exciting visual tech or use case of visual tech that you would want to have that's going to take that long to probably come about?
I can tell you just from listening to the last few speakers who I was listening in on, that I have absolutely no idea what the right answer to that is. I was just shocked by how far I was stunned by, I'm giving this pedestrian example of the stop sign cameras. I was shocked at how far along some of this stuff is and how quickly it's coming along, and it will obviously only accelerate. I mean, one of the more sort of funny things is how bad the humanoid robots are right now
Yeah,
at simple
yeah,
tasks like load the dishwasher. They just can't do it. The tactile capabilities are
sure, sure.
horrible. And the advances in vision and imaging there are going to be the answer to getting there, along with getting the fingers correct. But it's going to be 99% imaging work.
Cool. Two last quick questions. One I really like to ask everybody I usually speak to. In one word answers, what's your favorite personality trait of an entrepreneur and least favorite personality trait of an entrepreneur? And one word answer.
Self-awareness is the answer to both of them.
Okay. And why?
Self-awareness and lack of, because it's the answer to whether you're going to be able to pound through walls or overcome the next obstacle or not. If you don't know what you're bad at and don't know to surround yourself with the right people who are great at that,
Yeah.
you're not going to be able, when push comes to shove, you're going to be over in the corner crying and say, it's not my fault, it's his fault.
Right. Last question relates to that. So, in addition to that kind of advice, what that came out of, what would be the one additional single most important piece of advice to entrepreneurs, first time entrepreneurs that want to start a business in like
Yep.
a sentence or two?
It's always hard. I had a
Yeah.
YC founder come up to me and say, "Hey, I'll be super brief. He's like, are you Dick Costolo?" And I usually say no, because I never know if they're going to hit me after I say yes. But I'm like, yeah. And he said, I'm going into YC 2022. What's the one thing I need to know? And I was like, it's always hard. Just keep that in the back of your mind and you won't get frustrated, and you'll just, okay, next mountain, next mountain.
Fantastic. Dick, it's amazing. I really appreciate you joining us and sharing your inspiration with our audience. Excited to
Anytime.
find co-investment opportunities, and I'm going to
Yes,
pass it to
sir.
Max, and we'll see you real soon.
We'll see you,
Thanks,
buddy.
Dick.
Thanks, everybody.
Bye.